It's another edition of the Trading Tips video newsletter, teaching you how to become a successful trader today. This video newsletter is brought to you by consensuspicks.com.
Welcome to this edition of the TradingTips.com video newsletter. In this episode, we'll be looking at the holiday effect, the historical performance of stocks following market closings. Without further ado, let's begin. The stock market is closed 9 days every year. New Year's Day, Martin Luther King Jr. Day, President's Day, Good Friday, Memorial Day, Independence Day, Labor Day, Thanksgiving, and Christmas Day. That's it. Closing for Martin Luther King Jr. Day is a recent phenomenon, and we don't have enough historical data yet, so that holiday is going to be omitted from this analysis. Let's start with President's Day. Traditionally, the markets were closed for Lincoln's birthday as well as Washington's birthday before the two were merged into President's Day in 1998. Therefore, this data takes the average of the two presidents' birthdays for all the years in our data set prior to 98. Here we're looking at two numbers. The first is the S&P 500's performance starting 2 days before the holiday and extending until the end of the year. The second is the S&P 500's performance from 1 day before the holiday until the end of that calendar year. In this example, President's Day, the S&P 500 lost 0.1% beginning 2 days before President's Day, but gained an amazing 12.2% beginning 1 day before President's Day, holding the stock until the end of the year. 1 day makes quite a difference here and clearly shows the holiday effect. Before looking at the rest of the holidays, let's take a moment to ask, why? Why does this theory work? Or why does the holiday effect work? The theory behind the holiday effect is that traders tend to reduce their stock holdings prior to holidays in order to avoid any unexpected bad news. These sales drive prices down, and barring any bad news, prices shoot right back up. Thus, a day or two before market closing holiday is usually a great time to get into stocks. You're essentially playing the part of an insurance company, insuring risk-averse traders against bad news. And that bad news very rarely comes. Sure, you won't win every time, but insurers do tend to do a pretty good business, don't they? Typically, it pays off to buy the day directly before the holiday. And in those cases, in most cases, we're using 2 days before the holiday to show the dramatic difference that the 1 day makes. Here we see that buying on Wednesday before Good Friday, usually in late March or early April, and then holding to the end of the year provides a 7.3% return, which is not really that great compared to just the regular average. However, buying on the Thursday before Good Friday, the day right before Good Friday, provides a 17.8% return, which is much better. The 1 day made a difference of more than 10 percentage points. Memorial Day provides an even starker example, a negative 4.7% return if you buy 2 days before the holiday, but a 22.8% return if you buy the day before the holiday. In this case, that would be the Friday before a holiday weekend. Risk-averse traders particularly like to lighten their loads before 3 days off. You can also see how 1 day makes a big difference on Independence Day and Labor Day. The story changes when we get to Thanksgiving. In either case, 1 or 2 days, this does not look to be a good holiday to play. Christmas is a dramatic example. You could short sell stocks 2 days before Christmas and realize 7.1% gains by the end of the following year, or buy stocks the very next day and realize 15.2% gains. Christmas is the biggest holiday, so it makes sense it would be the most volatile. In the case of New Year's, you're holding for an entire year, but amazingly, buying 2 days before the first holiday and holding until the next New Year's provides an amazing return of 31.1%, whereas buying just 1 day before the holiday yields 19.6%. With no playable holidays on the horizon, Thanksgiving is coming, but it's not a good one to play. I thought I'd leave you with this election day example. Historically, the markets were closed on election day. And this is a good one to play 2 days prior to the actual day, which would be back on the previous Friday. The day before the election day, Monday, leading into the actual election, investors are too optimistic. They think that they've already priced in the election results. In conclusion, in the case of most market holidays, it's best to buy the day before the holiday. Why? Because you're playing the part of an insurer, buying stocks at a discount to insure the sellers against risk. That risk is rarely actually there though, and over time you do win, historically. In some cases, it's better to buy 2 days before the holiday. This is when traders are optimistic going into the holiday. New Year's is the only real example here, but Election Day, while not a holiday, is an even better example. In some rare cases, such as Christmas, short sale opportunities are present. This election day, take note of stock prices 2 days before the election. If they're down, you might want to consider taking advantage of this effect. We hope you've enjoyed this TradingTips.com video newsletter. Thanks for watching and good trading.
This Trading Tips video newsletter has been brought to you by Consensus Picks. Each week, Wealth Buyer's Consensus Picks software scours through 800+ financial sources to produce a short list of multi-verified stocks. Stocks chosen by more than one of the most accurate stock picking services. Then the Consensus Pick software automatically analyzes the short list of stocks using a series of proprietary filters, and it picks the single best stock out of the bunch. The Consensus Pick. Sign up today for Consensus Picks, and each week you'll be provided with the ultimate alert, a stock that's been independently selected by multiple stock picking resources. A true consensus pick. Visit consensuspicks.com to sign up today. View more Trading Tips videos. Visit tradingtips.com. Sign up for our free video newsletters and become a successful trader today.